Today, I'm going to talk to you about how you can buy a rental property using a stated income loan program. That means that if you do not have tax returns, W-2s, or paycheck stubs, don't worry, I can get you qualified. So we have a loan program called the Debt Service Coverage Ratio Program. This loan program is being highly utilized by short-term rental landlords and investors to buy Airbnb or VRBO properties, which, as you may already know, is generating very high gross incomes right now annually. So with that said, what we require on this program is very little. You gotta have money down. It starts at 20% down, and you must have a 660 credit score or above. Once you do, then we would get you qualified to buy a home. You are automatically qualified if your credit permits. Once you get into contract on a property, what we will do is make sure that the property cash flows. And what I mean by that is this. For the last 40 years on commercial financing, when you're buying like a retail strip mall, apartment building, or whatnot, these commercial financing methods are not based on what your personal income is. Instead, it's based on what the income can generate as far as revenue or rent goes. So on a residential unit, you could buy a condo, a single family residence, or a 1 to 4 unit building. And in this case, what we would do is simply when you are in contract, or if you want to refinance, we would send out an appraiser to evaluate the property value, of course. But in addition to that, they do a secondary report called a market rent survey. Whatever the comps come back as what the average rent is, as long as that covers your new mortgage payment, you are instantly qualified as far as the income portion goes. So to be clear, or for example, if you bought a home for $400,000 and had a $2,500 monthly payment, and the appraiser went out and did a market rent survey that said this home could rent for $3,000, well, that $3,000 covers your new mortgage payment of $2,500, so you are good to go. This loan program could be used for long-term rentals, short-term rentals, Airbnb, VRBO, all the above. As long as it's a rental property, then you're good to go. Now, one of the main requirements of this program is that you must be a primary residence owner already. Because it's a stated income program, banks, lenders are very weary about lending on these products to people who have never owned a home before. So if you own a primary residence, you have at least a 660 credit score, you have 20 to 25% down, and you are ready to be a landlord, this is the program for you. Subscribe to our channel below so you can find out more about home financing.